What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we continue to push higher in this rally as we blast through another critical resistance level. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today in SPY we were up 1.02% and we did break above that critical resistance zone at 396 and we did get the second day in a row closing back over the 50 EMA. So without a doubt, this bull trend is continuing to develop and developing legs to push higher. So now that we're above 396, it is very likely the bulls will have no trouble pushing a little bit higher to fully close the gap just above 401. And we will likely continue to push through that gap and come all the way back up to retest the highs right around 416 and possibly even up to 420. So keep in mind looking at this chart that we are now in an uptrend of higher lows and higher highs. So if you look at this rally day by day, you have to understand that we are currently in a bull trend in the short term. And this is going to be a bull trend until it's not, meaning we need to lose some critical support to get out of the bull trend to continue the bear market. Nobody knows for sure if we've already seen the bottom or we still have another bottom to put in. It's completely irrelevant as a trader because we only trade what we can currently see, and right now we currently see a bull trend. I think we can all agree that while we are in a bull trend, we are not going to SPY 350 because we would need to lose our critical support zone at 390 to reverse the bull trend to start heading lower. So if you're staying objective, there is no reason you should be trying to short a bull rally because you are trying to short strength and you have no way of knowing when this rally is going to stall out and we're going to roll over. So you're much better off waiting for the rejection from resistance and a breakdown through support before you try to short this market. If that doesn't make sense to you, it doesn't get any simpler than this. You are bullish as long as SPY is above 390 and it doesn't get any easier than that. So right now SPY is well above 390, blasting through resistance and trying to close the gaps above and more than likely going to continue to short squeeze the bears all the way back up to SPY 420. You can see all the moving averages have positive slopes and we're very close to having the moving averages crossing back over this 50 EMA. So this is going to become more and more impulsive the higher we go, as more and more short sellers get squeezed out of their short positions and end up becoming net buyers. So while SPY is above 396, we are very likely going to see SPY holding above our 50 EMA and going closing that gap above. And while we are continuing to ride the upper Bollinger Band, that is a sign of very strong bullish strength because if you go back this entire bear market, the only time that we were riding the upper Bollinger Band was back in March when we had that very impulsive rally. So do not think that a market can be overbought during a bull rally because we are clearly in a bull rally. And while you are in a bull rally, there is no such thing as overbought, just like in a bear market, there is no such thing as oversold. I still think you're only going to get about 1 to 2% pullbacks before buyers step in and start eating up that dip and continue to push prices higher. But of course, all of that is subject to change if we see SPY breaking back down below 390. Below 390 will very likely test the 20 simple moving average, which is a moving target because it does have a positive slope. But right now, that critical support below 390 would be right around 385. And I would instantly start to become more bearish if SPY breaks down below 390. So as a bull or a long trader, that is going to be your risk level. On the NASDAQ 100 triple Qs, we were up 1.44%. And again, we're seeing a lot of evidence of very strong bulls breaking and closing back over that critical resistance at 304 and closing at the top of the upper Bollinger Band. So we're seeing plenty of strength closing at the high of the day. You don't get price action like this unless it's the real deal bullish breakout. And we're back over the 50 EMA now for 3 days in a row. So there is no way you can look at this and see higher lows and higher highs on closing near the high of the day on green candles on very nice volume and see anything other than a very strong bull rally. From here, the triple Qs are very likely going to push up to about 313 to 314, but longer term, I do believe the triple Qs will make it all the way up to 320 and possibly even higher, and that is where the majority of the big bears will be waiting. You've noticed that I moved the bear to higher prices yesterday and for good reason because there are no bears in their right mind trying to sit down here at these lower prices trying to short this freight train. Any bear trying to short down here unfortunately was misinformed and completely ignoring price action and trend, and that is just a lesson every trader eventually has to learn. It doesn't matter how bearish the news is or how fundamentally bearish you are, if the chart is saying bullish with price action and trend, you have to hop on the bull or get off the ride. If you try to short this rally, you will be burned, so just keep that in mind. Critical support on the triple Qs is down here right around 298 to 296, and as long as we're above 296, you need to stay on this bull, or you need to sit on the sidelines and wait for some type of reversal of the bull trend. In the Dow Jones, we were up 0.52% as the Dow Jones continues to push higher, getting another daily closing high in the third day back over the 50 EMA. So the Dow Jones bulls are ready to fully close the gap at 323 and then start pushing higher to the previous daily high at 333. The bears will be waiting around 333, so we could have a very impulsive rally until we get up to that previous daily high. Critical support in the Dow Jones will be down here right around 318 to 317, and our 20 simple moving average is just above 312. In the Russell 2000 IWM ETF, we were up 0.51%, and we did get the second day in a row of confirmation of the breakout. So again, these are the real deal breakouts as we have clearly seen in the indices. And the Russell 2000 has the higher lows and higher highs and the breakout of our resistance trend line. 3 days back over the 50 EMA and very close to fully closing the gap at 183.5. And I completely expect to see the small caps pushing all the way back up to about 191. So keep in mind, these are very bullish price action and trends developing across the indices. And when all of the indices are aligning with higher lows and higher highs and getting bull breakouts with bull trends, it is the real deal, which means this bull rally does have legs and can continue to go higher. On the ARKK ETF, we were up 1.75% as ARKK has the second day in a row back over 47. And I do believe things are about to be getting very impulsive in the ARK ETFs. Keep in mind, this ETF is currently looked at as a joke and it has a lot of short sellers in it because of that, but we are now getting a bull breakout after a prolonged bear market. So expect a fireworks show while ARKK is above 47 to blast all the way up to about 52 to 55 and likely even higher than that. We do have a gap to fill all the way up here at 66. So while ARKK is above 47, do expect this to become a very impulsive short squeeze rally as bulls start to jump in and FOMO in because nothing changes sentiment faster than price. I guarantee you, if you are bearish on ARKK right now, eventually you are going to see the price action in this ETF and you are going to start becoming bullish because you're going to see the price action and you're going to get FOMO. So while I agree ARKK was the laughing stock of the neighborhood for the majority of the last 2 years, that is all about to change with what we are currently seeing on the chart. On the VIX, we were down 3.23% as the VIX has the second day in a row closing back down below 24, which is the last bullish confirmation we were waiting for. So we now have confirmation across the board that the market is heading into a bull trend, which means we are very likely going to see the bull rally have legs and go into some type of sustainable rally that can at least last till the end of the month and possibly even longer. From here, look for the VIX to trend down towards 20, and that will be the next support zone the bears will try to use to spike the VIX higher yet again. On Bitcoin, we're currently down about 0.5% as Bitcoin continues to cool down below the 50 EMA because we were just going too far, too fast above the upper Bollinger Band. But overall, we did see buyers of the dip exactly where we would expect, which is the previous high right around 22,500. And so far, we are seeing buyers at that level. From here, look for Bitcoin to put in a higher low above 22,000 before the run to the next resistance at 25,000 and then 28,000. And I do think Bitcoin has enough legs to get all the way back up to 30,000 by the end of the month. So I'm expecting to see a very impulsive rally in Bitcoin all the way back up to 30,000 with the only criteria that it has to stay above 22,000. If we break back down below 22,000, the bull run is over and we're heading back down to retest support. On NVDA stock, we are up 1.36% as we continue to see high volume buying, even though the volume is starting to die off just a little bit. But that is completely normal after the bull push to see the volume start to taper off as we continue the bull rally. NVIDIA is bullish as long as we're over the 50 EMA at 172. And if we break down below 172, you're looking for a retest of the support down here at 161. So get a lot more risk off if we do lose support at 172. From here, we'll very likely push higher to the next resistance at 183, and then above that, we have a blue skies run all the way back up to 196. We have the higher low and the higher high and very decent bullish buying volume, so there is no reason to expect this rally to just roll over and die unless we break down below 172. On Tesla stock, we are up a whopping 9.78% today as the Tesla bulls are flexing their muscles on extremely high volume buying and pushing all of the short sellers of Tesla out of the stock completely. Remember, the only way to burn money quicker than setting it on fire is to buy Tesla puts, and that is exactly what is going on with Tesla getting this bullish breakout above 745 with the gap up and run and slicing through two of our critical resistance levels like they weren't even there. Remember, we had critical resistance at 775 and 798, and we sliced right through those like a hot knife through butter, which means we're well on our way to the next price target at 828. Above 828, we're going to run all the way back up to about $900. So above 828, continue to expect this bull to continue to run, which means we're likely not even close to seeing the end of this rally yet. We just got a bullish breakout after over 2 months of consolidation, and we did break out to the bull's direction. So do not think this is something you want to short just because it went up 10% in a single day. Ask anybody who tried shorting Tesla after a bullish breakout in the past, and you will see that they had a very bad time. On Apple stock, we were up 1.51% as Apple continues to push higher as the leading indicator that the tech sector is ready to go back into this bull market, and we're very close to hitting that next price target at 156.5. where we could see this rally take a break as Apple starts to rest. You can see Apple has very bullish price action and trend with all of the moving averages chasing the price higher, and we're very close to having all of the moving averages fully stacked to the bull side. As long as Apple is above 150 and the 50 EMA at 147, you need to stay on this bull because it is possible that Apple is trying to run all the way back up to 174. The next bull breakout will be this breakout above about 156.5 with the next price target at 166. On the financial sector, we were up 0.64% as the financial sector has the bullish breakout from the resistance trendline and just needs to get back over the 50 EMA to fully close the gap above. The industrial sector was up 0.72%, breaking back over the 50 EMA and closing one of the gaps, and it's very likely going to continue to run from here to the resistance trendline and then close the next gap above, so stay bullish as long as it's over the 50 EMA. The healthcare sector was up 1.58%, closing back over all the moving averages, but still consolidating around the 50 EMA, so the next bull breakout will be the breakout above 131. The energy sector was down 1.75%, but still closing over the 20 simple moving average and that support zone at $70. So as long as the energy sector is above 70, it could still come back up here to retest the 50 EMA, which is right around 75.5. So jumping back over to the S&P 500, without a doubt, this is the real deal bull market as I have gone over all of the sectors and all of the market moving stocks and all of the indices. And I have shown you that the price action and trend are currently bullish, which means you need to stay on this bull until the bull trend dies, or you need to just sit in cash if you're bearish and wait for the rally to stall out. There is no reason to short strength, and if you're currently trying to short strength, I already know you're having a bad time. I don't need to ask you. Closing at the high of the day above the upper Bollinger Band and slicing through resistance is a very strong bull rally, and it is very likely there are a lot of short positions that need to be completely capitulated from before this rally is over with. So if you're sitting there thinking you missed this bull rally, I can assure you this bull rally is just beginning because we are just now starting to get the bullish breakouts. This is the very early stages of a bull rally and nobody knows exactly how long it's going to last. And if you're worried about whether or not the bottom is in, that is a completely different topic that has absolutely nothing to do with this bull rally. Whether this bull rally lasts 1 month or 6 months and whether we go to a brand new bottom afterward is completely pointless and will not help you be a better trader. Trade the chart that you can see today, and right now we see a bull trend with very bullish price action. Also, don't forget that I do have Bang Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bang beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.